Indeed, it's a surprise. Yes, most economists were not expecting any rate hike. Half of the market, the bond dealers also did not expect any rate hike. Clearly, because inflation numbers, both wholesale and retail, the inflation figures have come down, and growth is under attack. In fact, the policy document clearly says that the growth is losing its momentum, whatever little is left, in the third quarter, and the factory outputs have been contracting. So in this context, particularly when he left the rates untouched in December, it was expected that he would not do anything. So a 25 basis point rate hike, it's a surprise. I would think that in December he did not do, and now he has done, because in between one thing happened, apart from all the numbers and figures and all, it's the Urjit Patel committee report. So essentially he has, he was looking for some kind of endorsement of his fight against inflation, and this Urjit Patel committee report has given him the handle. This committee report has charted out a roadmap for retail inflation, which is 8% by January 2015, and subsequently it will go down, so on and so forth. Now the current inflation number is, retail inflation number is more than 8%. There is a very distinct feeling that by March you will see about 8.5% inflation, but still it's not low enough. The other reason behind it is this: even though both retail and wholesale inflation had come down in December, but the core inflation, actually the non-food, non-oil inflation, has gone up. So it is Raghuram Rajan, RBI governor, has made two things very clear. From now on, Reserve Bank of India, the anchor rate is CPI, or the retail inflation. He has nothing to do with WPI. And second part is this: between inflation and growth, there is no trade-off as such. Inflation is enemy number one. Unless and until you have persistently low inflation, you cannot have high growth. So he has gone all out to attack inflation. I think the key takeaway from this policy is this: yes, there is a 25 basis point rate hike, but we have possibly reached the end of the rate hiking cycle, and that's why you look at both the bond market and equity market, and initially they reacted very highly. They reacted, and after that there was not much of reaction. The stability returned to the market. So given things as they are, and if really the inflation is tamed, definitely this is the last of the rate hikes. That's in the short term, and in medium term, if indeed inflation goes down, I will not be surprised if Reserve Bank of India start cutting rates.